Good morning. This is Michael with backtothefuturetrading.com, and I wanted to teach you a few things that I've been studying on the markets using a relatively unconventional technique, but one that's been in use now for over a century. I don't know if it's been studied with this level of detail before, though. I'll let you be the judge. Before we start, please familiarize yourself with the standard boilerplate disclaimers. You can lose a lot of money trading. Please consider the risks when considering placing trades. Take a moment, pause the video as we go through each of these disclaimers. Make sure you thoroughly read and understand the risks involved with futures, forex, options, equities trading, as well as foreign exchange trades. Okay, so earlier in the week I posted a video and I told everyone who subscribes and everyone who was following our YouTube channel, and even emailed out a bunch of people the warning that we were coming into a buying pressure time, that the banks were more likely than not going to take the Emini S&P up from this congestion area, this close area around 40, 422, 420, up at least $25. And that was going to happen on a certain day, and I showed you which day that was going to happen on, and you can see where we're at right now. We've gone up, in fact, $37. Directly up from that point. In fact, it never moved down. It never stopped. It never looked back. It went straight up. And so I want to talk to you a little bit about the why of that and the how we can know what levels a market is most likely going to target, how we can know what times and when in the future to watch for those times especially. And I want to talk to you in regards finally with regards to big cycles on these markets. I want to talk to you about the big cycles of the market and some of the observations that I've been making about the ES. About 5 years ago, I started digging deeper into W.D. Gann's concept of cause and effect relationships in the market. He said if you determine the cause, you can predict the effect on the human populace of traders, and if you were really smart, you could find cause and effect relationships that the banks weren't even aware of. And this was, again, almost over a century ago. So I think the banks are pretty much aware of everything that I'm about to teach you, which makes this a very important lesson, because if they're following it, then it's something you probably want to be following. And we started to notice that there were regular cycles and occurrences that were directly correlated to economic events. That is to say, when the number of spots on the sun would reach a crescendo or a climax, we would as a nation have a recession, more often than not. And you can see where all these recessions are occurring in relation to the climaxes or the peaks of the sunspot cycles. And every once in a while, like back here around 1933, 34, we'd have a recession in the valley of a sunspot cycle. And it's important to remember that in 2008, we also had a valley in a sunspot cycle. And those are known as inversions. And Gann talked about this back when he was teaching other people about how this cause and effect relationship worked. He said, in fact, that inverted moves tend to be the biggest moves. So sometimes the biggest recessions occur in the opposite locations, the mirror image opposite, the valleys instead of the mountaintops. And so I took it upon myself to start looking and seeing what happens at these dates. And I was studying as best as I could with the dates that were available to me at the time in the bonds market, for example. And I started to look and see what happened every time there was a minimum in the sunspot cycle. What happened every time there was a maximum in the sunspot cycle? And I started to study that as much as I could with the information that I had. And I had some very compelling information, some results that led me to believe that I was on the right track. And so I came across this quote from J.P. Morgan way back in the age of W.D. Gann. And I started to realize that I was way closer to an answer than even I believed. And so I went back to my data and I started to ask the question, using my engineering brain, what were the exact high dates and the exact peak low dates of these cycles? Is that data even available? And the answer was a long, arduous yes. Scientists have been studying these cycles now for well over a century. And the data dates all the way back to the 1800s. And it requires some special equipment, but people are peering at the surface of the sun every day and counting the number of sunspots on the surface of the sun. Now, before we go any deeper, a lot of you want to know the why. And for some of you, this is going to be hard to stomach, but others of you, it'll be a gospel of sorts, a good news. Why does this happen? And what Gann figured out, what the banks, I believe, understand about the human populace, is that we are subject to the conditions of our environment. So, for example, if you sit in the sunshine, it's common knowledge that your body produces something known as vitamin D. If you sit in the sunshine, it's also common knowledge that your body's serotonin levels, which are responsible for your sense of well-being, are actually affected by sunshine. And this is one of the reasons why there's a high level of suicide in areas of the world like northern Alaska, where they have shorter days. And there's a huge industry, a booming industry of tanning beds, for example. People need light. But what other people have figured out is that the energy radiating from the sun consists of particles that affect our electric field as well as the Earth's magnetic field. And those irradiated values, when they arrive here, arrive in the form of things like gamma rays and X-ray radiation that stimulate the Earth's outer ionosphere. And if you think of the ionosphere like a shell around the planet, it protects us from being burned or fried by all this cosmic radiation. But down below, here on the surface of the Earth, other scientists have figured out that we are sensitive to microvolt changes in our environment. And other scientists, one comes to mind, her name was Valerie Hunt. She was a PhD out in USC Berkeley, who did some studies using NASA equipment, I believe, discovered that if you increase the Earth's electric field, people actually feel happier, perform better using motor skills tests, can lean forward, reported feeling a higher sense of consciousness. And if you decrease the magnetic field, these are things that NASA was interested in when they were sending astronauts into space, of course. When you decreased the magnetic field, people felt sad. They couldn't complete the motor skills tests, and many of them just fell over. They lost their sense of stability. And so what I believe the banks know about us and what the banks know about these cycles is people are essentially suckers every once in a while when the field around them changes. So imagine, for example, you were married and you were in a marriage that you weren't necessarily happy in. So you took your wife to see a hypnotic marriage counselor, or you took your husband to see a hypnosis counselor. And while they were under, you did a very unethical thing. You slipped the hypnotist $100 and you said, "Hey, every time I say the word chicken, I want my spouse to have to say the word yes to whatever I ask them to do. And the unscrupulous hypnotist says, yeah, sure, of course. Then you come home and you say, hey, honey, friends of mine want to go to Las Vegas this weekend. Can I go? No way. We have stuff we have to do, and there are chores, and there are things that we've got to get done, and you've got to call so-and-so. And you say, hey, sweetheart, chicken. Aw, of course you can go to Las Vegas. And so what I believe the banks are doing, I believe they're waiting for moments in our environment where they can essentially say the word chicken, but in the form of a trade setup that doesn't normally make sense, that we normally wouldn't take. But we're physiologically predisposed because we're beat down, we're not feeling well, we don't have the radiated energy that we need to make clear decisions, and so we get sucked into longs that turn out to be shorts, sucked into shorts that turned out to be longs. And the banks essentially behave like this unscrupulous spouse, pushing markets when they can because they know people are at their worst, or they push markets when they can when they know people are like a kid with ADD who just had a bag of sugar. And that's what these peaks represent. They represent times where these traders, humans as a general population, are climactic, meaning they know, their bodies know this is the maximum, the energy they're going to get, and they just make irrational decisions. Okay, so I had the bright idea to try to zoom in on these peaks. Bright idea. I had the idea to try to zoom in as far as I can and find the exact day of the swing high and the exact day of the swing low. Now, this isn't easy. Sometimes there were moments where it's just no sunspots for a while, and we had to perform some calculations, make some observations, and basically look at every day of every low and high. But the results were very intriguing, and that leads us back to my chart. So on my chart here, you'll see that I have a red dot for the last solar maximum, and I have a green dot for the last solar minimum in the E-mini S&P. And what I've done here is apply some laws that I've learned and am teaching my customers in regards to projecting cycles forward. And we actually use Fibonacci time extensions to do that. What I've got here are the last two dates, the minimum and the maximum, and I described this in my last video. And what I've done on the right side of the maximum is project this gap 150%, where my green line is, and then project that gap 200%, where my red line is. And you can contact me for more information about that technique. It's actually very useful on these smaller time frames, rather, as well. And so I started to notice something. If you took the gaps between the 150% of the solar max and min, and you started splitting them into thirds, we were catching large inflection point cycles in the E-mini S&P and other related market stocks. This would work on forex pairs as well. Anything related to a financial instrument, I found this had a strong dominant effect. So let's just put that here. There's the last solar maximum, and I'm going to scoot this over. 1, 2, 3. There's 150% right there. Okay, so maximum, bingo. And so the first thing I did was I split it into thirds. 33.3% was right here, and 66.6% was right there. So over here I had a maximum cycle. That's the red dot. The end of that, the 150%, is known to be a buying pressure time, a minimum, if you will. And so I have to get across the gap and maintain that color sequence. I have to maintain the oscillation from red to green, from red to green. So what I wanted you to see here is where the first 33% kicks in. And do you notice that this is a green arrow right here? Okay, I'm going to try to make this a little lighter so that we can see it. Okay, and let's use a brighter outline so that we can get to it. So here's where 33% of that gap kicked in. Do you notice that it's at the very bottom of a triple bottom right here? And so this starts to really reinforce in my mind that something important was happening on this date. It wasn't just some haphazard thing where it happened to line up near that point. Now, the next third, here's 33.3%. The next 66.6% is this red arrow right here. Okay, and I want you to notice that again, it's not a random location. And again, this works with other markets, stocks, forex pairs, the whole Megillah. And so there were some pretty big turns right here. This one started and drove up. This one started and drove down. Does it make sense? And then I wanted to apply the theory of thirds again to those gaps. So I took the gap between the 0%, the 33.3, the 66.6, and over here at this 150% extension, where I have those yellow lines, these blue lines rather, these dashed light blue lines. I broke each of those up into thirds. Okay, and now I want you to see what happened when I maintained the color oscillation. I had a buying pressure time here, and then followed by a selling pressure time there. I had a buying pressure time here on the major third, followed by a selling pressure time here on the secondary cut, or the secondary third. Then I had a buying pressure time here on the secondary third, followed by a selling pressure time here on the major third. And now this one was particularly interesting to me. I had a buying pressure time on the secondary third split, but in my course this is what's known as a pattern 5. Do you notice how that green arrow appears at the peak? This green triangle appears at the peak of the high, and how it withdraws or retraces there. There's actually a pattern in my time series that predicts the effect of that relative to price action. If we have a higher high signal at a buying pressure time, it's defined as an inverted move. And that's why I have the number 5 here. And so you'll be interested to see that we have at that exact moment a retracement, a reversal, an inversion, before it continues and goes higher to the next secondary split. Okay, so between the last solar cycle maximum and the 150% extension forward into the future, there are some relevant reversals occurring. So those of you that are asking questions, does the software work with longer term horizons? You're taking longer swing trades. Many of my customers that were using the intraday software were asking the same question. Forgive me. We're asking the same questions. And so I wanted you to see splitting it up once with these gaps revealed large cycles. Splitting it up a second time into thirds again revealed smaller cycles that had equally significant implications. Now, we don't live in the past. We want to maintain a forward look into the future. So whatever we did to the first gap between the solar maximum and the 150% extension, we can do to the second gap. So what I've done here is I've split this area into thirds as well. So here's the 150% extension, and this is the 200% extension. So now we're living where Back to the Future trading sort of owns. We own the right side of the chart. No company does this as well as we do. But remember the technique that we use, right? We're just splitting this into thirds. So this would be a green cycle. This next one, when we get here, would be a what? A red. So think about that. This blue line in the future is going to behave like the large red cycles did that we've just examined. So we're headed towards a major third red selling pressure time. And then right after that is a buying pressure major third. And the only reason that's important to us is because when we were watching it over here, do you remember how important it was? The only reason it's important is because when we were watching over here, look at what took place at those major thirds. So the last time we had one of those major thirds, we had one of these. And the last time we had one of those major thirds for the selling pressure, we had one of these. Let's go ahead and change that color. Is this making sense? So the major thirds produced these pretty big moves. And if you want to, you can sort of follow here. I'll flip this arrow along. This cycle started and ended up here. And then you can see what happened when the next big selling pressure cycle began. It basically started here and ended where it started, with a huge move down. So these green arrows are predictive, were predictive, in the same sense that this green arrow and this red arrow are predictive. Does that make sense? What we just looked at 2 minutes ago is what's waiting for us, potentially, off to the right, if this solar cycle heebie-jeebie stuff is really working. Now, earlier in the week, I took the major thirds, which we haven't arrived at. We're still in the first 33.3% section. I took that first third, and I did like we've been doing. I went back, and I put these golden lines, which were the secondary thirds. Okay, so if I do that, I connect it to the date associated with the 150% extension. You'll see here that I can snap it to the major third. And that's where we got the information for the ES to go up. Remember, the colors oscillate: green, red, green. And so inside of this first major 33%, let me just make sure that's locked to the right spot, and it is. So I have green here, followed by red, followed by green. So the colors oscillate: green, red, green. And I knew when I made that video a few days ago that we were coming into a green cycle where the ES would push up. Does that make sense? And so I know off here to the right, like we said earlier, that we had a red selling pressure cycle coming over here. So I knew that this surge in energy was on its way. And we knew to the day when that surge was expected to occur. So keep one other thing in mind. Remember, once we have a third, we can split it into thirds again, right? And so I'm able to now really drive down with some detail and split these sections into thirds again, right? Just like we did when we first started. So remember, the colors oscillate: green, red, green, red, green, red, green, red, green, red. So let me go back and fill in the green parts, right? Red, green, red, green, red, green, red, green, red. You see how that works? So now over here I can fill in where those secondary cycles took place. Red, green, red, green, red, green, and then up here will be red. Do the same thing for the opposite side. For the minor cycles, red, green. We'll set that as default. Red, green, red, green, red, green, red, green. Okay. Could you go in here and do it one more time? Could you split these thirds into thirds? You absolutely can. And that's a technique that I work with my customers doing. So basically what we're looking at here moving forward is the ability now to project when the next secondary third cycle, or tertiary third. This is 3 levels down of splits. The major split was the original set of 3 lines, which is right here. We're inside of the first third. Then we have the secondary split, which was the yellow lines. And then we have the third split, which are these guys here where I've been putting the dots. So we're 3 levels of third splits down. But now you'll notice here that I can put a vertical line. Let's make it smaller. Let's make it like 2. We'll hit apply. And if I pull this section out, watch how this works. I can actually see how many days. 1, 2. I did it again. Hold on. I have to save it as default. Used to be easier to do this in Ninja 7. Some things in 8 I think they made more complicated. Okay, so there's 1 day, 2 days, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. Looks like 26 trading days across from this split, the secondary split, to this split, the tertiary split. That's pretty cool, right? So most people, when they start trading, fall into the trap of working with vendors who sell reactionary indicators, tools that are lagging, and the ecosystems, the partner programs, everyone out there is selling a lagging tool that they sell you believing that you'll believe that if you just follow it, you'll be in good shape. But here we see that the banks aren't playing that way. The rules of the games that they're playing are dependent upon predictive cycles. And so it becomes a question now of whether or not you're ready when they're ready to make the move. So just some thoughts here, and I wanted to bring this to your attention. I can measure how far, on average, when the banks have the opportunity to push up, I can measure how far from the low of the candle to the high of the move they usually go. I can also measure from the low of the candle to the end of the cycle how far they go. So here it was $86 and $31. Here it was $22 and $60. You see what I'm doing here? And then I can come back here on this cycle and it was $81 and $68. And I can just sort of work my way back and see how far are these cycles going up. In the case of the major cycle over here, I can measure and see that the market finished $100 higher. I can come back and look at the other major cycle there and see that the market finished $157 higher. And I can come over here and see that this one finished $144 higher. Okay, is that making sense? This green cycle here, I can see that it went $76 higher. So I can come back and measure the exertion levels that the banks used when it was time to experience one of these irradiated moments when the earth is being potentially hit with positive energy, right? Or when it's that time in the energy cycle. So keep track of these values with me. 76, 144, 150, 106, 68, and now up here 86, 60. So 60 seems to be the smallest number, doesn't it? It seems to me that since the maximum back in 2014, $60 seems to be the minimum it goes up in its maximum favorable excursion. And so over here, we can actually keep track of that, can't we? So I'm going to move one of these tools over, and we'll take it from the close. And I'm going to pull this down and go to 60. So right here, whoops. Here's sort of 60 right there, and I want to move this off to the left just a little bit because I had another tool right here that I was measuring. There we go. Okay, so if I put this on the close of the candle, 60 seems to bring us up to here. That's 2503. Now that's pretty interesting if you think about it, because 2500, that's the strong psychological round number, right? That's a number that you could hear these talking heads on TV going on and on about. The S&P hit 2500 and blah blah blah. So the minimum value between here and the next red dot is anticipated to be another $30-40 above us between now and then. So in my mind, looking at this equation, it seems like anywhere below this price between here and here is a buying opportunity. Anywhere below this candle, remember how some of the cycles will actually dip down before they come back and finish up higher. It seems to me that anywhere below the low of this candle, around the 420s, is a buying opportunity, especially if it comes and touches the moving average down here. The 120 on the ES is particularly deadly when it eventually, if it ever comes down and touches. So just performing an exertion analysis, which is what I call what we just did, just looking and seeing when it was time for a buying pressure phase in this cycle. How far did the banks move? Think of it like a bunch of kids in gym class going for a run. You have one kid who can run really far, you have most of the kids who can run pretty far, and then you got kids like me, the fat kids, who get tired. How far, at the very least, can the fat kids run when it's time in the market? And here you see 60, 70, 80 tends to be that level. And we know by when we can expect that, or when we should expect that. And now I'm just looking at this chart like you guys are. I'm seeing the same things you're seeing. And I'm seeing that line right there. These cycles, this concept of using a predictive tool to understand the cause of market movements and then predict the effect, I believe these kinds of techniques are how banks push the market. I believe these kinds of techniques are how they are controlling when people trade, what direction, for how long. I think this is how they're controlling what kind of stop runs to put in place when they know when people are in a certain kind of mood, when they know they're predisposed to do certain things. So for example, if we took this piece of information that we've spent so much time building, I can literally come and split that level up into thirds again. And what can we imply just looking at this? We can imply that there's some selling pressure coming on that third, and we can imply that there's a small retracement, some buying pressure coming when we get into there. And it's based completely on science. It's based completely on facts. It's based on the statistics of the model. Okay? If we applied that same technique, this is a fourth split down now into thirds, the fourth level down. Look, red, green. You already know where the red's going to be. Red. Were those significant moves from the close of this day up, holding and maintaining that support level? Was this a significant move down all the way into the next cycle? So why wouldn't it be here? And why wouldn't it be here? If you can know these times, why wouldn't you know? And so this is the trap many traders get locked into, because we've been conditioned by the vendors in these programs, these guys selling trading rooms and hopes and dreams. We've been conditioned to believe that this kind of stuff is a pipe dream. This kind of stuff doesn't exist because it's hard. You have to think. You have to employ research. And we want a magic bullet. We want an up-down arrow that's going to solve all of our financial problems. And every other area of our life, there's never a magic bullet. But for some reason in trading, people think it exists. And these vendors are all too happy to take your money. So if you're looking for a change, you're looking for a difference, you're looking for an escape route off of the merry-go-round, then we may be right for you. Keep your eyes on these cycles moving forward. I'll be tracking them, as well as hopefully posting more videos later this weekend and early into next week. If you have any questions, you can visit us. Our website is pretty fantastical. That's my Facebook page. Don't need to spend much time looking at that. Come on, website, load, you can do it. backtothefuturetrading.com. When you get there, just click on View Demo. If you click on View Demo, it'll take you down a path of instruction and also introduce you to our weekly webinars where we meet every week and go over live charts like this. Anywhere from daily and monthly time frames all the way down to 1 minute, 3 minute, 5 minute charts, 4 range, 4 tick, whatever you're into. We can help you see what you want to see and what we believe institutions are using to trade the markets you're trading. I'm Michael with BackToTheFutureTrading.com. I hope this session has been instructional for you. Keep your eyes open, keep your head up. Whatever you do, make sure you trade your mechanically rules-based trading system. And if you're not at that point yet where you feel comfortable and are ready to be profitable, no rush. Take your time. Every day that you're not losing money is a day that you're learning, and that's an important thing. Take care, everyone. We'll see you at the webinars.